All right. Hi, everyone. Welcome to this timing research special event titled Two Unique Options Strategies and with Price Headley of BigTrends.com. So, of course, this presentation is for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. This session is being recorded and will be available on TimingResearch.com as well as the Timing Research YouTube, Substack, and the usual podcast networks. So today I've arranged for the special event with someone I've known and been able to work with for over 20 years now. So he's here to share his options trading knowledge with you. And I'm going to turn it over to Price Headley.
Thank you so much, David. And yes, it's been a pleasure working with you over all these years. And good morning, everybody. I want to focus you on not one but two unique option strategies that have been working for us in today's markets, and what I think are going to be working for quite a while. Obviously, you can't make forward-looking promises in the investment game. Past performance can never guarantee future results, but it's about creating a structure and a system to manage the volatility. And it's a very news-driven market. And we've got the ultimate way, I think, to play. One of what's become the most popular news-driven stock these days is Tesla. Not just because of what Tesla, TSLA, is doing in terms of as a company, but of course because its founder, Elon Musk, is in Trump's ear and basically in a very unique position here, which is going to lead, I think, to a lot of opportunity, both to the upside and the occasional shakedowns or surprises to the downside. But we're going to talk about how you can trade Tesla and use options on that, but also how you can then also create what the second strategy is, more of a hybrid approach of getting your money, your risk capital back faster back into your account and letting the rest of your trend run on a bunch of other names too. So it's not just Tesla today. That's why I wanted to give you two strategies to share with you, things that are working both with a one ticker approach with Tesla and with a multiple symbol approach in the next one. So we're going to get into all that here. Just as David said, to just remind you as we get it rolling that everything that we share with you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but they also have large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our BigTrends.com homepage for more information here. So we'll walk you through these couple of different techniques here, both of which we've had a lot of success with here, looking back at a great 2024. And even just in recent days and weeks, it's been amazing to see how these things have been moving too. So we're going to walk you through what's working in the markets lately and how you can put it to work for yourself. And so the second strategy, in addition to the Tesla strategy, is geared at two different targets. The first target gets you your risk capital back quickly compared to anything else I've ever done. And then the next piece is to let it run for up to a week, right? So these are fairly quick pops here. I'm always curious to know your feedback about how much you've traded options. And if you could type in your chat box for those that are with us here live, type in your chat box how many years you've been trading. Just type a number. If you're brand new to options, never traded an option before, type a 0. If you've traded them for 20 years, type a 20. Always great to hear from folks how long you've been trading. We get a mix, right? We get folks that are brand new to trading, don't know what we're talking about when we say the word options. In fact, maybe have some trepidation about it when it comes to, and so we get somebody who hasn't traded options. I'm not going to name names, put anybody on the spot, but don't sweat it if you haven't traded an option. Everything we teach and trade is designed to be the KISS principle, keeping it really simple, really easy to get in and out. I don't do any complicated options combinations here. And what I'm talking about, it's just a simple options purchase. And when it's time to get out, we just get out of that option. We don't try to roll them. We don't try to change our position up. We don't try to do any kind of repair strategies or anything else as it might seem kind of complicated here. We want to keep it really simple. I've been trading options for 35 years, and that's worked really well for me over 3.5 decades. In fact, you see just a little intro slide on me, 35 years and counting. Founded BigTrends.com just over 25 years ago, November of 99. Just had our full 25th year anniversary this past month. And it's always been about a systematic approach. Everybody's hyped on AI now, artificial intelligence. I've always said for the last 25 years at Big Trends that you've got to have a quantitative numbers edge driven model that says this is why I should be trading because I have an edge. If you don't know what your edge is, you shouldn't be trading until you can define your edge more precisely. For me, I caught the trading bug while I was a student at Duke University. Right after the crash of '87, I was reading the journal, hadn't traded yet. I was just reading about it and kind of just curious about how this stock market thing worked. And this is before computers, right? So I was interested to learn more. So I got into this collegiate investment challenge sponsored by AT&T at the time. Some 14,000 students in this contest, paper money, of course, at the time. But bottom line is that I said, well, what a great time with the market crashing to follow Warren Buffett's approach and buy quality stocks on a market crash, right? I remember buying Procter and Gamble, buying Coke, buying Gillette, P&G, and all those names and saying, you know what? That should be a pretty good place to be, right? And I get my statement with a month to go in a 4-month contest. 3 months in, I'm in the bottom 25% of market participants. And I'm going, guess what? If your strategy's broke, you owe it to yourself to fix it, do something else. So you don't go broke. You actually can start growing your portfolio again. And I took a more active trading approach in that final month of the contest, went from the bottom quartile to the top 1%. They even sent me a letter saying, wow, they hadn't seen such a big comeback in such a short period. How did I do it then? I was scalping, basically with all my accounts, scalping an overhyped stock a day. Wouldn't do that with real money, but basically in that contest, I was being aggressive in my capital allocation and managed to shoot up. This is the beginning of 1988. So this is still, there's a lot of takeover hype and a lot of those things were popping back down after they didn't materialize. So it was an interesting time and still is now an interesting time here, some 40 years later. But the bottom line is that, for me, after graduating from Duke, I became an analyst and head of research in the 90s for what was at the time the nation's largest options newsletter. But realized, got them into the internet in the mid 90s and said, look, the internet's going to change this business of sending out trade alerts just like it's changing every business. And so I got my own internet business going with BigTrends.com in November of '99, and blessed to serve so many people over these past 2.5 decades, 25 years and counting. Also blessed to be featured in Barron's Magazine a couple different times. And the first feature I had for Big Trends was September 11th of 2000, a year before the 9/11 tragedy. I said, watch out below. There was way too much hope and hype about tech coming off of that top at the end of the 90s. Everybody thought once Y2K was over, it was safe to go buy tech blindly. And we all know in retrospect, the Cisco systems of the world that were considered the safe plays, sure, pets.com went belly up, but Cisco systems dropped 80+%. Amazon dropped 90% from high to low over those first couple of years of the 2000s, right? And you say, man, Amazon ended up being the big winner and still it had a 90% drawdown, right? That's something as a trader and even as an investor, I think you can't stomach. You have to come up with ways to manage that type of volatility. That's just unacceptable to take that much of a risk in your position in your portfolio. So we are constantly guiding folks on how to manage risk, and truly be blessed to be inducted in the Traders Hall of Fame back in 2007, sponsored by Traders Library. There's a picture of the award they gave me on our conference table here in our Big Trends headquarters. Bottom line is that it's all about kind of standing on the shoulders of giants. So I've learned from a lot of other great traders. And my goal for you today is to learn from what's worked for me over 35 years and counting. So let's get into a really specific approach, right? Instead of trying to be a jack of all trades and a master of none, right? We would like to focus on just mastering one particular setup or pattern and one particular security. In this case, Tesla. This is actually our newest Big Trends product that we've launched out of late. And it's been really popular because, as you know, Tesla is all about, they're all in the news thanks to Elon Musk, basically being in Trump's ear and having a big part in Trump's reelection. And of course, now having the leadership of not just our Department of Government Efficiency. We'll see how that goes. But of course, with his leadership of the Tesla car company, the SpaceX space exploration company, all these other, even as you know, he was one of the co-founders originally of OpenAI, which is behind the whole AI revolution as well. But of course, he has stepped away from that, but got his fingers in a lot of pots, right? It's going to be really interesting to see how his role evolves as our government transition happens with the inauguration again in January. But in the meantime, there's all kinds of moves happening, and we've actually had multiple scores in Tesla in the last week alone. We've had a couple doubles and another near double just in the last week. This is just one of them. This is one that we entered back on Friday and got out here on Monday in Tesla calls. And so a big part of this whole strategy is designed to follow momentum. So you can see that we got in as the stock was breaking out last Friday, closing up near those highs. We had actually just cashed out of another winning position just a bit earlier that day from the prior day's entry. But we caught into that again here, bought it on Friday. And notice the stock was finishing in the neighborhood here of about just under 390, and we're buying a 395 call. Now, how far out do we buy these calls? We're usually going out about a week, going out anywhere from 3 to 6 trading days before expiration. So on a Friday, we're buying the next Friday's weekly options, right? So the beauty of the Tesla and a lot of the big name stocks out there is that they have options that expire every single Friday, not just once a month. In the old days, it was just every third Friday of the month was the monthly options expiration. But they added weeklies many years ago, and Tesla's got them every Friday expiration, right? So even if, as I look now, if I was looking at a trade here today, I would be actually willing on a Tuesday to consider the same Friday's expiration. But once we get into oftentimes a Wednesday afternoon, we're going to typically be looking to rolling out into the following Friday's expiration, certainly by Thursday. So the point of it is that, look, we paid $7.55. Now, what that means is that if you buy one option contract, it controls 100 shares of stock, right? So the idea is that when you're buying a call, you're making a bet on the upside. You have a right to own Tesla at 395. You say, well, it's not worth anything at 390, but the point is it's got time to become worth a lot of money. So people are paying a basically an embedded volatility for that amount of time that they're paying for, and how much Tesla has had a history of moving. And so it's saying that you're paying $7.55. That's $755 to control 100 shares of stock. So let's say you're investing $1,000 a trade. Well, you would only get one contract. You'd only control 100 shares of stock. That's fine, because 100 shares of stock here would have cost you about 39 grand, right? You're controlling $39,000 worth of stock for just $755 bought late on Friday. We like to buy these in the final about half hour of the trading day, because these are daily charts, right? And so the idea is that we're waiting for the daily chart to be set up properly. So what's our target? Our target is, let's go for a double. And typically we'll see one of two things happen by the next trading day's close. Actually, one of three things. Our double target achieved, our stop loss achieved, which is a 50% stop loss, or a time stop getting out at 3:30 the next trading day. We don't hold any of these trades past the following day at 3:30, but also we don't have any day trades with this portfolio. So if you're a small trading account, you don't have to sweat any kind of day trades here, because if we get in near the end of the day, we're going to be looking to hold into the next morning at the earliest for an exit. So we're not getting out the same day on any of these. So it was a beautiful thing, made that double, got out at $1,515 for that same one contract. So you can see we made $760 before commissions. Obviously, on one contract, you're not paying more than $1 a contract. No ticket charges anymore. There's never been a better time in my 35 years of options trading than right now to be an options trader, because you're keeping the vast majority of what you earn on your trades. $2 round trip would have been the most you would have paid on a commission. And as you get more active, you can even cut that down to about 50 cents a contract on your costs. So, we're going to look at a lot of patterns here, but basically this strategy uses a couple of bullish patterns and then one bearish pattern. We get into more of those. You can see no day trades. We're holding it up to about 24 hours from one trading day's afternoon to the next trading afternoon. And so, of course, if it's a weekend like that, we got in on Friday, and the markets don't trade on the weekend or holidays. So we get out the next trading day. The simple strategy is to buy an option, buy a call or buy a put. We've got two different call setups, one put setup based on this daily chart momentum here. of course, everything I'm teaching about here, remember, past performance never guarantees future results. Future results are going to vary. Obviously, there's going to be winners, there's going to be losers. It's about managing that to get bigger upside while with manageable risk. We tend to focus on the next Friday's expiration, especially if it's a Thursday or a Friday entry. We'll get in the next Friday. If we get in on a Monday or Tuesday, we can definitely go to this coming Friday's expiration. Wednesdays, it's kind of a judgment call, but typically we will say let's be careful and give ourselves some time here and make sure that we can hop out. But some Wednesdays we can get on that same Friday's expiration, so we're going to be careful about it and make sure that we never hold past that next trading day at 3:30. So 3:30 is the action point on the entry and the exit. 3:30 Eastern time. That's Wall Street time. About a half an hour before the bell rings on the New York Stock Exchange, right? And across the major stock markets in the US. And so you can see that we can get a signal once per day with these setups here, making sure that the daily bar is giving us the kind of momentum, the kind of setup that we need, whether it's a buy the dip or a breakout for bullish trades. We'll talk about both. This really saves us and you a ton of time. You don't have to screen watch. You don't have to sweat this. You basically just say, okay, at 3:30 is where we expect to get a new trade if we're going to get one. We're not always going to have one, but typically we expect a couple of trades a week. Sometimes this past week, I think we had 3 trades in the past 5 trading days. So there's been plenty of opportunities, and all 3 of those have worked. That's not the usual, right? The usual is expect some to work, some not to. But if you can make it double, then you can keep your risks around 50%, and then sometimes just even time stop out a trade for even less than that. Downside risk, then you're just saying, okay, we can manage our risk and the gains can outweigh the losses. That's the objective and what we're looking to accomplish here using the power of weekly options, the every Friday expiration. We'll scan for these though, just to say, okay, our setup's being met at 3:30. Okay, we've got a setup, we've got an action point, then we'll fire it out via real-time email to all of our subscribers. And then you can also get set up for mobile phone updates as well. Whenever we have a new entry or a new exit instruction, you get plenty of trades and plenty of profit opportunities from this. You say, why should you care when you say add up all the trades at this system on Tesla Options Trader, we call it. Tesla Options Trader from the beginning of last year through today on all closed trades generated a 356% gross return. That's a more than quadruple. $5,000 portfolio grew to 22,804. That's gross portfolio value. That's a gross profit of 17,804. And that gross profit means before commissions, before subscription investment. This assumes that you start with $1,000 a trade on a model portfolio of just $5,000, and that you never deviate from that $1,000 a trade maximum commitment. So even as you would grow your portfolio dramatically, we're not assuming you grow your amount to put into the next trade. We're just sticking with a fixed $1,000 maximum commitment per trade. So like I said, you still may just be getting one contract a number of times on a Tesla trade, right? Sometimes you might get 2 or 3, but the idea is that it's not ever committing more than $1,000 of risk capital. You know, when you buy an option that theoretically, if some really bad news happens, you buy a call and really bad gap down happens, you could pretty much lose what you put into that options purchase, right? That's your maximum risk as an options buyer. Obviously, if you're an options seller, you could theoretically lose multiples against what you're collecting in as an option seller in the front end. So we focus more on the buy side here, looking to hop in, hop out, and be disciplined about following the system. So a big part, and remember on all these chart examples, past performance can never guarantee future results. Future results are going to vary, right? You're going to get winners, you're going to get losers. You can't predict exactly when that happens, but you know that if your system is effective, you can make more when you're right and then lose less when you're wrong. That's certainly the objective. Now, I can't get into all the exact settings, but I can give you a sneak peek at what we're looking for. We're using some filters here, like the 20-bar simple moving average, right? So that means that if we're getting a bullish setup, it better be above that 20-bar simple average. That's just a very basic, about last month's worth of price action, okay? And it shows if we're above that moving average, it means the trend is up. We can only get a bull trade. If it's below that, we can only get a bear trade. Then we look at the price action of those individual daily candles, right? candlesticks show us that momentum. If we're getting some bullish or bearish momentum, the bearish trades do require some extra filtering for us, because bearish trades can be a little trickier in getting faked out sometimes with bear trades a little bit more than with bull trades. That's just part of what you get. So here's actually is a bear example. So it was well bearish on Tesla, right? We are never expecting to call a top or call a bottom, right? We don't play for those kind of reversals. We are playing for the building momentum in our favor and ultimately in your favor when you become a subscriber at getting on board the direction that Tesla's telling us it wants to go. You can see a really red candle means that we opened higher here than we're closing a lot lower. So that's showing us the negative momentum in red. And it has been persistent. There's our moving average here. And of course, we're well below that moving average. So these things are all checking the boxes that we think Tesla's got more downside. Stock finishes the day around 227.5, 228. We're getting in that last half hour to the slightly out of the money 226 and 2/3 put. So that was some kind of an odd strike price, but that was adjusted for a prior split that stock had, I believe. So the point here is that we paid $4.05. That's $405 to control each 100 shares. So if you're putting in $1,000, that means you get two contracts at 405 a piece. Means you're in for two contracts, controlling 200 shares on the downside for just $810 total investment on the front end. As you can see, the next day, it doesn't just trade lower, it gaps lower. It opens down about 8 points, just under 220. And on that 8-point move, we're getting about 4.5 points of it. We get out at 850. Remember, we're in for 810. So you're making just over a double, 109.8% gain. And as you can see in this example here, you got two contracts at 405 a piece. Now you're out at 850 a piece. So that $810 investment has turned into $1,700 and thus has made you like $890. So that's in just the next morning, right? So that's literally only in the trade for maybe at maximum a couple of market hours from the prior afternoon to early that next day. Very minimal time in the market to get that quick doubler. So that's a downside example, but of course, not all winning trades are going to hit their 100% price target. There's going to be times where the time stop kicks in. So like I said, if we don't get a 100% gainer or a 50% loss, we will get out the next trading afternoon at 3:30. So here's an example of some Tesla 267.5 calls. Stock was trading as we got our entry signal on a big breakout. This is actually before the election, but you can see there's our big breakout there. Around 260, we're in there on the 267.5 calls, and it pops up to about 270 that next day, but it finishes around 269. And you say, okay, well, how can it be worth? It's a 267.5 call. How can it be worth 820 when it's only like $1.50 in the money? Because you still have a lot of time premium in it, right? You still have plenty of time, so that's what people are paying for. Is they're willing to buy or sell an option if they think it's too cheap or too expensive relative to not just volatility factors, but relative to the trend factors, how much that stock and market can move up or down. So, but that was a great follow through move. You can see though that it didn't turn into a massive win, right? We got in, we're back around that 260 level, and then it ran the next day to almost 270, finished at 269. So it's only about $1.50 in the money, but it's still holding a good amount of time premium, and therefore we're able to get out at $8.20. That's a 40% gain for that next day's work. So the point being that, okay, they're not all going to fire to doubles, but we're still happy with how that worked out. Then you look at this example where we have a couple of different things to show you. First big pop to the downside, you see really big hard momentum finishing near the lows. 162.5 strike put, stock trading about 162, and we're paying $3.80 for those weekly options. Of course, we're trying to turn that 380 into 760. The next day when it gaps down and keeps going intraday, gets all the way down here to the 765 price target, and then you see it starts to snap back up. So ends up working out real well for that quick pop to the downside. Then we go ahead and book that And in that case, you say, okay, that's exactly what we're looking for. Hop in one afternoon, get out the next morning. Hopefully, you can get our double target, help you manage through those inevitable kind of ups and downs in the market, just to take advantage of a short window of opportunity here. That's all we're trying to do. And you can see, as it turns out, it's going from a little bit out of the money to a bit in the money in some of these cases, right? So, and yes, it did keep going. It did keep dropping, and that's going to happen from time to time. I don't sweat that. It's really about saying we can get a double in 24 hours or less, take the money and run, right? The bird in the hand theory is what we're talking about here. So objectively, we're just saying, okay, look, if we can get doubles, and then when we get stops, take a 50% stop or a time stop, can get us out a little bit less than that, then we say, okay, fine. So here's another example where it didn't make us as much. This is the 143 puts. You see, we're not early, but you can see it's showing us that same kind of negative momentum, finishing down near the lows of the day there again. Here we are about the 150 level on the stock. We're buying the 143 puts, about 7 points or about 5% out of the money, paying $395 a piece. So again, we could get two of those contracts in for just under $800 total. And then you see we're making a point per, or $100 per contract, or $200 on the whole trade for the two contracts when it pops to 495 as our exit the next day. 25 and a third percent gain. You can see this as the stock finishes. Having finished the prior day at 150, the next day is at 147. A lot of people would say, oh, hold on, and hope that it keeps on breaking down. And my view is, look, we give it a window of time to take our double. We're trading a time limited asset, right? We're trading options that on average have a few days to go before their expiration, a few days to a week to go. And so, but we're losing one of those days, right? So we might be losing on average, if say we had 4 days to go on average before expiration, and we lose one of those 4 days, we've lost 25% of the time on that trade. Now, you won't lose 25% of your time value that way. It's not quite how options time value works on its decay. It will decay faster on the day of expiration and decay slower and slower as you go more days out before expiration. So going from 4 days to 3, not a big problem on the decay. We'll lose a little bit of decay, but not nearly as bad as if you rode it right into the final day of expiration. That's not something we're doing here. So point being, we made a 25% gain, kicked it out because it just didn't get to a target or a stop. Take the money and run. Not every trade's going to win, though. Here's an example of what a losing trade can look like. This is when we did on Tesla, where it's a buy the dip strategy, right? So we actually are seeing that we had the lower open, but now we've seen that that hook back up, right? It's getting that J hook, my friend Steve Bigelow would call it. Uh, but basically, you can see here that down open, the positive momentum back up. Usually that's a good sign that there's a snapback coming. Instead, you see it snaps against us. So we paid 570 for it. We get one contract at 570. Our stop would be like 285, and it gets filled at 280, down 50.88%. So, that's going to happen, right? And you can only get one contract there at 570 on $1,000 invested. So in this case, you would have lost what, $290 on that trade. Yep, that's going to happen. So lose 290. Of course, I've showed you examples where you made 800, right? Or you theoretically put $1,000 in, doubles can make 1,000. So you got to look at it as how big can I win versus how relatively smaller can I lose. So that's very important as you look at these patterns and these setups. Look at what we've been doing. With Tesla Options Trader, it's been finding an average of 7 new option trades each month. So obviously there's about 20 trading days in a month. So there's going to be times where we didn't trade it. But there's also times like that were triggered right after the election here earlier in about a month ago, or early November. See the first gap up after the election, and our system picked it up the day before that. So guess what that resulted in? Way more than the 100% gain, right? You can see that when Trump was announced the victor, the whole market's gapped up, including Tesla, dramatically, because of course Elon Musk was backing Trump's run. And so the market's view is that Musk is well positioned to be in Trump's ear and be a beneficiary for Tesla shareholders as well over time. So instead of the double target being reached, that was such a massive gap. You can see that we got our entry back when the stock was trading in the low 250s, about the 262 and a half calls. And then you see it gaps way up from being about 12 points out of the money, it actually opens about 285 and now is more than 20 points in the money here. So we're ringing the register into that opportunity to book those quick profits and go from there. So, we'll come back to that though. You can see we came back into it after making that massive score. We came back that same election day reaction afternoon and said, we want to get back in. We're finishing around 290. We're buying 290 straight calls. We paid 525 for them. So you can see we can only get one contract for 525 bucks on $1,000 invested. And the next day it doubles and goes to 1050. You make 525 bucks the following day. So I think we're done. No, we've got yet another one here that we're hopping in on the afternoon of the 7th. Stock's now finishing just under 300, maybe 297. We're buying the 307 and a half, about 10 points out of the money calls. Again, paid more than $5. So we pay $1,000 invested would have gotten you one contracted. These options are priced in the 5s to 6s or more. And so one contract in at 570 bucks, obviously we get the chance to double it when it snaps up huge to make 101.75% gain. So it worked out real nicely. And then yet again, one more where we were getting in here near just over 320. We're now buying the 337 and a half calls. And you can see that those calls are going to benefit from that big gap up that is about to happen here, right? The stock had finished just over 320. Now you see the stock's going to open here around 345, right? So look at that and say that's the kind of gain that can get you not just a double, but well over a double for being on the right side of it, right? We paid 625 bucks, so we can only get one contract, and yet that turned into 2,175 bucks because of the huge gap up, and thus that was a 248% gain on that final piece. So the opportunity exists for better than doubles on gaps. Of course, there's always risk that gaps go against you and you can lose more than 50% too. So keep all these risk and reward factors in mind as you set up how you're going to trade this, because it's all about taking advantage of that. So Richard asked about trade dates. Those were all the week after the election that happened earlier in November here, the reaction post-election mostly. But, I mentioned earlier that we'd be looking at two different strategies, but let's talk about our second one here, getting away from just the one ticker Tesla trade, which has worked like a champ, but it is, something where it can move a lot, right? Well, we want things that can move a lot, but we also would like to get our money back quicker. When we can get our risk capital back quicker and hold the rest of a position to a potentially much higher reward, that will improve your win rate and it'll improve your confidence about the benefits of options buying. So we call this strategy 333 options. Get into why here in a few minutes, but point being that we're looking at an average holding period of about a week or less. Simple option buying. We'll always buy the next Friday's expiration, and so it's going to be held about 5 to 10 days before expiration when we put these trades on. This can generate up to 10 new trades a month. And what we found is it's boosting our win rate above 50-50. And that sounds like not that impressive. Most people say, oh, I'm looking for 80 and 90% win rates. Well, then you shouldn't be buying options. The problem with 80 to 90% win rates with option strategies is it's usually related to things like credit spreads, where you're selling premium and you're saying, hey, premium selling is where it's at. But then when you're on the wrong side of selling premium, you can really get blasted very hard. So you got to be really careful with that side of the game. So the point of it for us is that, hey, when you can take your risk capital off and say, okay, even if the other part of your position goes to nothing, you can't lose, then whenever you sell that last part of your position after having taken the bulk of your trade out in the form of risk capital, the bulk of that will all be about making sure that we manage that risk intelligently while still giving ourselves a chance to let the rest of the trade run, right? Letting the rest of the trade run is something that I see so many traders have trouble with. Let's talk about more examples. Here's one with Apple. Wasn't even the biggest one we had with Apple this year. We had a much bigger one, I think, to show you later. But basically, here's one where part of the rule is that it's got to be triggering and showing us it's making new highs here, and it made new highs on that blue line, telling us that it's okay. It's ticking up. We didn't trade it as grinding back up. And you say, oh, you missed a bunch of opportunity. This is all about finding those one particular pattern. Now, here's the philosophy. The first profit target on this system, 333 options, is a 50% gain. What we want to do, it used to in the old days when I got to a double, then I would sell half my position and let the rest run. But with this strategy, we're saying we figured that, hey, if you make 50%, you can sell 2/3 or more of your position and get all your risk capital back, right? So if you invest $1,000, it's up 50%, you're up to 1,500. You basically sell 2/3 of your 1,500, you get that $1,000 back in your account, and then you got the other 500 left over, right? So you got the other third of your position still on. In this case, with that being an odd number of contracts, 5 contracts meant that we had to sell. We couldn't sell 3 of them. We had to sell 4 of the contracts when it was up 50% to get the risk capital back and then some, right? So if we're investing about $905 here on a maximum of $1,000 invested, got 5 contracts in. You have 4 contracts out at over 250, and you can see that you're getting your risk capital back. In this case, you're making a little money. You're making almost $100 on the trade from the get-go, but you still have 1 contract left. You say, well, why even bother with the 1 contract? Well, you can see that, we hopped in because it all met our parameters of not just higher highs, but also higher opens. And so we basically bought into those out of the money 227.5 calls when the stock was about 225 or so. And you can see we held the other one for 5 days. Once we got our risk capital back the very next day as it tested up into the old highs, that got us our first risk exit. And then we took all our risk capital back into the safety of cash, right? And then we're holding the final contract for 5 days. And you can see on that 5th day, it gets up over 232.5. And we're booking that last option contract out at $5. Remember, we paid $181. Now we're out at $500. That made us over 3 times what our first target was at 176%. The total profit on the trade, or $905 invested on the front end, was $683. So almost half of that came, about $319 came from that very final runner piece. We call that the runner piece of this hybrid model. So the runner piece is the big growth opportunity. That will tend to be on the minority of your overall trade. But the key here too is that you gave yourself a chance to let the trade keep working for you. So that's really important on at least part of your position, right? We don't want all that capital risk. We want to get that risk capital back once you can get to that free trade position. It frees you up, not just financially, but psychologically. We call it 333 options because we're talking about getting at least 3 contracts, and we're going for, in this case, paying no more than $3.33 per option contract. There's the 333 there, 333. But basically saying, look, when you can invest $1,000 and not pay more than $333 per contract, that means you can get 3 contracts for $999 when you don't pay more. So that's the basic premise and principles of this. And then what's really important here is that once we get 2/3 of that out at our first target at the risk-free trade, then we're going to really focus on where's our best of the best opportunity from that point forward. So you see some other examples here, like, and just you see, if you bought 3 contracts for $300 a piece, that'd be $900 invested. You make 50%, you push that on up to $1,350, and you go ahead and take 2 of the 3 contracts out, $450 a piece. The 50% gain gets that original $900 back. You still have 1 contract remaining, and you seek to take that up to a bigger gain over the next 5 days. Give it a chance to run. So many people don't give their big trends a chance to keep being right. The reality is, usually when you're right from the get-go, you're going to be more prone to be right for a longer period of time. Usually when I'm wrong from the get-go, I'm going to be prone to be wrong longer than I would like, right? So it's about knowing when to cut and run quickly if it's not working, but when to take only part of your trade off when it's working, give it a chance to keep working. So we take 2/3 of it off at 50%. That makes it risk-free, and thus the unlimited upside goal on the final piece of our position. This is one with Philip Morris, the tobacco giant, where it's breaking out. You can see making new highs, big momentum shift to the upside. Very next day, we're already getting our first target here. So in that window, you can see that that's exactly where we'll say, okay, now we have a risk-free trade. We sold half or 2/3 actually of our position out at a 50% gain, right? We got 12 contracts on for $80 a piece. We're selling 8 of the 12, 2/3 of the position out at $120 over the $80. That's a 50% gainer. 8 times 120, that's the same $960 we invested on the front end. Now back in the safety of cash the very next day's bounce there. We still have 4 contracts remaining. We keep riding those for the full week, and look at what that ends up making. $325. I'm sorry, 325%. 325% on the dollars, you can see 340 over the 80 made us $260 per contract. We had 4 of those contracts. So profit of 260 times 4 is $1,040 profit on the last 4. Think of that. The total profit of 1360, the bulk of that came from the final 4 contracts, right? We made $1,040 out of our 1360. The other 8 contracts made us like 320, or was it 300? Yeah, $320. So it shows you that that's the power of not just getting to a free trade status, but to the power of letting the rest of a good trade run for the 5 trading days. That's really our objective. So you can see when we say, okay, show me your total performance since the beginning of last year, $5,000 account would have grown here to like 14,442. So that would put you into an area where you're at a near tripler, right? And 189% gross return before commissions, before subscription investment. So worked out really nicely. We can also, help answer any questions you have about this, as you wish, by saying you can always call our 800 Big Trends line. We can send you full track record for your study as you wish. But this assumes that same $1,000 a trade with no compounding, right? Just keep that in mind. Past performance will never guarantee future results, but the idea is that we're going to keep following the system that's guided us so well through all of these various ups and downs in the major markets in recent times, right? So taking that first 2/3 of a position off at a 50% gain can result in a profit, even if the final third of the position goes against us. Here's an example where AMD didn't fire Advanced Micro Devices. You can see we got on as it was launching. A couple days later, we're going ahead and booking for the first 2 contract exit at a healthy profit up 50% on the first 2. But then you look at that and say, well, where do we go from there? Well, we certainly try, after we make that first 50%, we try to let that rest of that trade keep working in our favor. But if it doesn't, we'll just go ahead and cut and run. This one started to roll over the other direction. So we got in at 325. We've already gotten 2 of our 3 contracts out at a healthy profit, but now this last contract has to be closed down. And you see that it gives us our exit into, and our insight into that final day, that final hour's action point on a daily chart. So you can see in this case, we made 50% of the first piece risk-free trade, but then we lost 26.5%. And yet once you've gotten your risk-free capital back on a trade, and you're just looking at how you would trade that, well, you just basically would focus yourself on the best of the best opportunities, and then it doesn't follow through here, you're still taking down a $240 profit because you were smart about booking the first risk capital back into your account opportunity that you could. The 50% gain in the first 2/3 or more of your position is just a vital way to really take advantage of this. And we call it the hybrid strategy. You're getting lots more growth than you might be used to because you have the comfort to let the rest of your trade run, but you're also getting your risk capital back faster than you're used to. So therefore, it's really truly a hybrid of both a greater win rate improvement you get from that, quicker risk money back in your account that much faster, and also the runner piece continuing to run. So for the first time ever, what we're doing is we're offering you a chance to get not one, but both of these programs, the Tesla Options Trader focusing on Tesla, but also the 333 options focusing on both growth and quicker risk management. You get both of these strategies with the offer I've got for you today, but it is only going to be available to the first 25 traders who take advantage of it. Let's talk you through this. Tesla Options Trader, if you bought it on my Big Trends website, it would be a lot. And so the bottom line is that you can see we're giving you 12 months of trade alerts. We're going to do 12 months of both of these programs, actually combine them for just exceptional value. You also get, it's not a black box system. You get to learn the strategy from the ins and outs of the training videos I put up every Monday after the close. And so you get the Monday training videos, you'll get the settings and rule sheet, the strategy session video, and then access to me and my research team if you got any questions in executing your own particular questions and strategy, but of course we have to focus on just what we've called out for subscribers. That's what we're there to help answer questions about. It would be $297 a month times 12 would be over $3,500 if you bought it off my website. That's just for Tesla. If you bought 333 options off my website at bigtrends.com, you can see same strategy sessions, same settings and rules, weekly video training, and the dedicated email to me and my research team. That would also be over $3,500. So add those two up, you're over $7,000 in value, but it's going to be way under that. It's going to be super opportunity for you to lock in a chance to diversify with two strategies that have been working for my Big Trends community here, especially lately. It's been pretty much red hot for Tesla and very nice for 333 options as well. So 12 months of both. So we're covering you to cover you for most of 2025, right? Finish out this year, but also cover you through early December of 2025. So the beauty of this is that $7,100 plus a value. I'm giving you an instant discount of what would be $997. I'm going to give you an extra bonus account credit thanks to being a Timing Research member, thanks to David and his team as well. That'll take you all the way down to just $497. Think about that. That's more than 90% off of the $7,000 plus total value list price of not one but both programs. You get both programs for that one low price of $497. It's not $497 a piece. That alone would probably be a more than fair price point as well. But I'm saying I'm giving you a chance to get both of them together for the one-time investment of $497. We'll cover you for 12 months of trade alerts in Tesla Options Trader and 12 months of trade alerts and 333 options, all in for just a one-time commitment of only $497. That's this price is so low that I told David, I said, I'm not going to keep it out there that long. I've got lots of subscribers that have paid a lot more for it and are plenty happy, but I'm giving you that rare chance to lock in this extra value when you act quickly. Where's the link? It's TimingResearch.com, David's site there, TimingResearch.com/big trends. And so when you go to that, you see, yeah, this is US dollars here. So do your calculations if you're international on currency, but $497 US dollars. That's a steal for how much of a return we've been able to generate for subscribers looking back, remembering that past performance never guarantees future results. And while future results are going to vary, what doesn't vary is our commitment to getting you every new system trade alert from now forward with no stop. So with no, I should say, with no hesitation on our part, and thus no hesitation on your part. We will have stops and targets in there. We'll tell you exactly how to manage every single trade. We'll never leave you hanging. But what we won't do is hesitate, right? What I see gets a lot of traders in trouble is the picking and choosing, the hesitation, the questioning of their method, their system. This is something where we've seen this work through all kinds of market conditions. So our job is to get you that clarity of, hey, it's time to get in. Hey, here's how you're going to get out, whether to profit target, whether to stop. So you'll be guided each and every trade on that, never left hanging. 9,452 gross profit dollars. Remember, that's before commissions, before subscription investment over the past almost 2 years. And you see, looking at the Tesla options trader, it's pretty dramatic there as well. Remember, that's just a $5,000 model portfolio generated over $17,500 of profit gross before commissions and subscription investment using that same 1,000 a trade. So obviously between the two, Tesla's been the more profitable looking backwards. But there's an expectation that with one security you could have, and especially a name like Tesla, you could expect some more volatility both up and down in Tesla comparatively. That's why I also gave you the stabilizer of the 333 options portfolio, the hybrid approach that I taught you about here today as well. Reminder, what one trade's been able to accomplish. Just one trade on Tesla made us a whopping, you can see here, $760 from one afternoon to the next morning. This is just back on Monday when we cashed this one in. We did it again right behind that, but we're just focusing on that one that we just did the other day. So we've done multiples here. And when you say, well, what does it look like? What can I expect to get? Like, what's a trade alert going to look like? Let me actually just grab my email real quick and just show you an example of this real quick. It's kind of nice to be able to see it about how we did this. And so like that trade, for example, when it came out December 6th, we said, okay, we know that we want to get in here to a new trade on Tesla. Okay. So we said, okay, we're going to go ahead and put it out there to say, okay, what's the game plan here? So I find it on my email here. And so you see, when we put this trade out, we put out this trade to say, okay, let's get into the stop and target on Tesla here. And I think it's right there. Okay, yeah, here it is. Because you can see at that time
Oh,
we were actually
we're,
cleaning up another
we're
one here.
still
Yeah,
seeing
David.
your Tesla slide. Okay.
Okay,
Now
thanks. I was having to drag it over. Thanks, David. So yeah, this is what it looks like. You got the picture of the Tesla there, but you see that we were cleaning up another one here, which we had already because we don't pay more than $1,000. So that prior one, we were already taking some profit down on that one. But then this was the new one that we got into, the 395. And again, we're not saying to buy this here because these options have not expired, right? They expire this Friday. But the point of it is that we're saying, look, we were buying this at 775 or less. We ended up getting in closer to 755 was our official entry, but we'll give some room, right? We don't want you to be worrying about missing something. So we're not wanting it to just race away and not have you participate, right? So we want you on board, and so we get into that trade. And then what also happens is that once we get that, then we will also have a situation where we'll say, okay, then we'll follow up and say, so what do we say come Monday morning? So to come into December 9th here, and you see here that we've got a lot of orders for, as you can see. But basically you see, okay, then you get this Monday morning instruction. There it is at 9:16 on Monday morning. To say, zoom out to that a little bit. And you say, okay, there's our stop and our target at work, right? So our stop's 50%. And we say, okay, now we're looking here at targeting 15.10. And then we ended up filling it at 15.15 not long after the open here. And then I think it was probably my associate Dylan, I think, sent that to me. Let's see, where was that? 1 second. He sent me the confirmation of our exit at what time was sent over right there. Filled 15 minutes after the open, 9:36. Okay. So basically we track it in real time based on what subscribers are able to achieve, right? So this is real world trading. So it's something where we're following up on that stuff all the time for you, so you don't have to sweat it and you get the clarity of the instruction. And of course, you get a dedicated email to me and my research team if you've got a question, right? David also threw in an extra bonus. Thank you, David. For those that take advantage of this today, he's going to also throw in the stock watch list weekly newsletter, retail value for the next year, $100. So you're getting that at no additional charge here. And you can see proprietary algorithm, thousands of stocks each week, give you a bunch of additional ideas. You can see 3 new watch list ideas every Sunday sent out, so you're ready to go for the new trading week. And then you get occasional other special bonus reports and research. So, these are highly liquid names on a lot of stocks that are over $3 or more. So you're getting a lot of stock flow there of new ideas as an extra bonus today too. So you're getting a lot with today's special offer. Remember, what is today's special offer? In addition to that bonus, thank you, David, of additional stock ideas that are going to flow to you each and every week from that special bonus, you're going to get 2 unique systems. One, just trading the Tesla options. The other, trading with this 333 options hybrid approach, getting the first 50% gain target and then letting the rest run to potentially multiple hundreds of percent on the remainder of those 333 options trades. With stop management on all these trades, right? So if it doesn't fire, you know where to get out. You're never left hanging. It would normally $9.97 would be a great value, but I'm giving basically an additional $500 timing research account credit for you today and today only as my thank you for being a timing research member. My thank you to David and all that he's done to help get the word out for us here today. So you get to lock in both of the programs for the next year each for the one-time price. It's not 2 of these prices. It's one-time investment of only $497. It's a phenomenal value. That's why I've got to put a limit on it, because I've got subscribers who have paid significantly more than this, and I don't want to disadvantage them. So bottom line is that you get to take advantage of this today, but today only. It will expire at midnight. So where do you go? You go to this link that we set up for you here. It's a really simple one, TimingResearch.com/big trends. And again, when you look at that page, let's look at it real quick, and then I'll see if there's any questions to answer here. Bottom line is you look at that page and you say, okay, look at this and say, you're going to get all discounts have already been applied, right? We said it's over $7,000 in retail value. And you also get, we didn't list here, but you get David's bonus stock, at least three stock picks every Sunday in your email box as well for the next year too. So that's another 150 stock ideas bonus added on there. Thank you, David. But bottom line is you're getting all these trades across both of the portfolios for more than 90% off, 7,000 plus dollars in retail value down below 500 bucks, 497 bucks. You can see this is a secure page. Remember, we're on our 26th year serving our Big Trends community. And so you can put your payment info in on that page. We're really all about keeping it simple on our order instructions. Make sure, see the email field over here, make sure that your email field is indeed really clear. You don't mistype your email. We don't ask for it a second time. So double check your email. Please make sure you get your email right, because that's how we're going to initially communicate with you and get you your trade alerts in addition to your welcome information. We'll also send you instructions on how you can get set up for mobile phone updates too. I highly recommend that as well. To review all that, review the terms and conditions. It shows you how we've been doing business for 25 years and now counting under our 26th. Look forward to this next year ahead and many more to come. Bottom line, though, is you can complete your purchase with your credit card information there, or you can use the PayPal link once you click on the hyperlink terms and conditions link there to review that, agree to that, then you can go through PayPal as well. And a few clicks later, boom, you're good to go, locked in for $497. That gives you exceptional value. And here's the other piece, folks. We don't just leave you hanging with this like a bunch of trades that nobody's talking about. We follow up on every trade, win, lose, or draw. You're never left hanging with this support that you get from me and my Big Trends team. So you get access to my analysts and myself. If you've got a question about the trades that we called out, we've got a client care team as well to support you with any other questions you might have that are standing by. And they're standing by right now too. So if you've got questions as you get your orders in, feel free to give us a call at our toll-free 800 number. It's 800-244-8736, or you can remember it easily by it's also spells out at 1-800-BIG-TRENDS. So 1-800-BIG-TRENDS, a great one to remember if you want to reach us toll-free with any questions. You can also email my customer service agents directly. They're in my office here as well, here in Lexington, Kentucky, via clientcare@bigtrends.com. We're all about service and making sure that you get the top quality any questions you've got, get them answered. So if you've got questions, you can email us clientcare@bigtrends.com or call 1-800-BIG-TRENDS. I'll come back into David to see if there's any other questions that I might have missed, and then we can go from there. Thank you so much for having me, David.
All right. Yeah, thanks for being here. This is a ton of value for everyone. So let's see. Let me look through the questions. Someone asked what the second year will cost.
Yeah, I mean, typically go back to more of a close to full value, but my philosophy is that you will see so much value from what we're able to generate for you that I think you'll be very, very pleased with this. So basically, I don't think the cost will be an issue once you see what this can do for you. Obviously, you can't make promises about specific future profits. We can only show you what we've done in the past. And I saw we had a question for somebody asking, what was that Tesla result again? So let me show you that real quick too. Because of course, the bottom line is it's all about making sure that you get, not just the opportunity to make money, but that you learn while you earn. So we're all about constantly teaching you about the system too. So we're calling out the alerts, generated 17,804 in profit US dollars since the beginning of last year. Past performance can't guarantee what the future holds. We know the future is going to vary, but what doesn't vary for us is our system consistency, to be able to follow the system through the various winners and losers, to say, let the results kind of shake out over time. If you've got a good system that has that quantitative edge, then it's about just extracting that. So what I always remind people, especially if you're a new subscriber coming in, is do not get too high or too low. Let yourself really focus on steady consistency. I'd rather see you trading one contract at a time to start, to just let the system prove it to you. Of course, you'll need to trade 3 contracts in the 333 option system to start, but just trade small. Don't get more than $1,000 committed to start. And with that, it can allow you to focus on letting the system do the rest of the heavy lifting for you. So yeah, that's a great value for just $497 for that type of not one, but 2 different option systems that have been working well. I see Dave asking, do we do the 0 DTEs? We've explored it. For subscribers, Dave, I've certainly traded them myself, but the bottom line is that you don't have a lot of runway with 0 day expiration options. That appeals to a lot of traders, but it's more speculative. And there's just issues with, do we have enough runway, enough time to let the trade play out? And if somebody misses a trade alert or something, they're like, oh, well, I missed that trade if I'm acting on it hours later or something. Obviously, we don't want you waiting that long on any trade to get in, but the point is we want to make sure you got enough time to get in and enough time to let the trend truly be your best friend. All right. Any others, David?
I think that's it.
Awesome. Well, thank you for having me. And folks, don't sleep on this. This offer will expire at midnight. It's frankly far too low of a price point for all the value you're getting, but it's my way of saying thank you for being a Timing Research member. Thanks to David for partnering with us to help get the word out about how we've been doing this for people with Tesla and with the 333 options hybrid, both growth and higher win rate for options buyers than you might be used to, approaches merged together. So thank you, David, and I want to say appreciate the opportunity to present this to the Timing Research crowd.
Yeah, thank you, Price. I really appreciate you being here and sharing your education and this great valuable package for options traders, and I think people will really enjoy it.
Absolutely. Thank you as well. I look forward to serving you folks with a year of both of the programs, as well as answering any questions you've got. I'm popping in our 800 number, the 800 Big Trends number there for you as well, and the client care at bigtrends.com email. So if you have any questions, just pop it in there and just note that you saw it through Timing Research, and we'll definitely make sure you get this unseen ever before, never been this low on both of these programs together for just $497 if you act today. So don't pause, don't hesitate. Now it's your time, folks, to take action and lock in this awesome value. Thank you, David.
All right. Thanks, Price.
Take care.
All right, you too. Yeah, and just everyone go to TimingResearch.com/bigtrends and take advantage of this offer right away. Thanks, everyone.